All right, and welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, give the video a thumbs up, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways here, so S&P 500 had a nice rally this week. We got a shortened trading week. We gapped up on Tuesday, got right back above this trend line after trying to break down last week into Thursday, Friday, into OPEX, and then a little gap up here in a 1-2 consolidation, and then a nice gap up on Friday, gapping right into this high here from the previous week, and then a nice, just kind of a short squeeze really into Friday. And over the last couple of weeks here, I said that we'd probably bottom out the week after OPEX for a potential summer rally, and it looks like that is potentially in play here. Now the market's not necessarily out of the woods yet, but it does look like we have a really good chance of having a little bit of a summer rally here. If you take a look at volatility, we broke through that 30 handle, and we broke through that key 29 handle right there, those pivot highs. That's been kind of a key pivot point here for volatility, and breaking through that, is a good thing for the market. It does bode well for upside. Also, the closer we get to the 4th of July holiday, the lighter the volume will get, which generally bodes for a neutral to upside bias. So markets tend to kind of float higher during these holiday periods as institutional traders tend to take off. My guess is by Wednesday, the volume will really dry out, and we should get some type of a float higher here in the broad markets here. So a nice little short squeeze going on this week. Again, markets oversold here and just due for some type of relief here. If we look at the spiders on the weekly, see you had a nice outside week. So we tried to break down last week, and then we gapped up and got outside of that, closed above the high, and then really just filled that gap there on the weekly. Same thing on the triple Qs. So a nice gap up, and then actually got above gap fill. So a lot of these tech stocks did rally a little bit better than some of the S&P stocks, and a lot of that has to do with them being more oversold. And the more oversold you are, the more you're going to bounce. It also has to do with energy stocks going through a little bit of a correction, which we'll talk about in a little bit here. But as far as upside targets, your near-term objectives, so you do have this trend line here, kind of down sloping on the triple Qs, and then right here, this gap fill, that's going to be some pretty good resistance, as well as that 50 moving average, kind of coinciding with this breakdown area. So really between 300 and 303, we'll call it, on the triple Qs is going to be really good resistance, at least in the short term. And then on the spiders, we're going to be looking at probably this pivot high here where we gap down to, so around 395, 396. Then if you get through that, you got 402 and then 408. So those are your kind of short-term resistance levels, and this one should be pretty good here, this 408 level. That will be good resistance if we go up and tag that. I don't expect that to necessarily happen this coming week, but that will be resistance when it is tested. Russell 2000 here, so via the IWM. So last week we talked about this level, this monthly trend line, and we were below it. We were trading all the way down here last Friday, by last Friday's close, and I said, hey, there's still 2 weeks left in the month. They could still save this, and we got a nice pop. So they did push it up here. We're back above all three of these trend lines now. So a nice little save there, stick save for the IWM. You see the weekly as well, nice reversal. And then on the daily here, you can see basically went right up into that gap window. So right to that pivot high, closed right on it. And then your levels on the Russell are going to be this gap fill, and then this other gap right here. So 178 and change, and then right about 183, 184, all the way up here. So those are the levels on the Russell. But again, nice move for the markets. Oversold. We're due for a rally, due for some. Really not so much a rally, but we're due for things to quiet down a little bit. It's been so volatile. The VIX above 30 for, we talked about the VIX a minute ago. It's been at or above 30 for quite a while. We've been getting 3% moves in the S&P and the NASDAQ almost on a regular basis every day. And, the market's probably due for a little bit of a summer doldrum type period here. That doesn't mean you should let your guard down. This is still a treacherous market. You got to be careful. But I think there's a good chance we have of putting in some type of a interim low, we'll say. So anyways, let's looking at a couple other sectors here, go through the usual suspects. The semiconductors, I noted this earlier this week. Semis are a little bit weaker, and I don't like seeing that. I like to see the semis lead the market, but they have been lagging. Maybe there's some concerns about Taiwan. That's certainly a possibility. The market may be concerned about that. It's just barely off the lows here. You take a look at the low we put in last week. We barely got above this pivot high here from Tuesday, and we didn't even clear the pivot from the previous week. Whereas if you look at even just the triple Qs, we got well above that pivot. So semis are a little bit of a weak sector, but if the market holds up, they'll hold up, they'll get a bid. But overall, not a good sign here for the overall strength of the market in the near term or really the long term. And sector that is strong though is cloud software. IGV, take a look here at Zoom. This has been making higher highs. So this bottomed out all the way in May, over a month ago, and this has been making higher highs the whole time. While you take a look at the triple Qs, that's been making lower highs and lower lows. Spiders, lower highs, lower lows. So Zoom has been holding up really well. Another one's Salesforce. They've been holding up. That actually made a higher low here with this week's pivot, or with last week's pivot rather. So some of these cloud stocks are holding up really well. Definitely notice. Take a look at ServiceNow. This one almost taking out the pivot from previously, early this month, and another higher low there. So cloud stocks are outperforming. Some of that money rotation looks like it's coming out of semis and going into cloud. So interesting little dynamic going on there. Not sure what's going on. Maybe there's somebody who knows something. Again, could be, there is speculation. I don't want to speculate too much, but there is speculation about Europe doing lockdowns due to, energy constraints. So these are all just kind of like postulating, but it is, is what it is. Cloud is outperforming, and some of these semis are not performing. So continue to watch this, but for now, we'll give all these sectors the upside bias if the market can hold up here, especially with the holiday light volume. Anyways, Dow Transports. So again, another weak sector, so coming under a lot of pressure. I know fuel costs have a lot to do with this. So Dow Transport's coming under a lot of pressure. I believe FedEx had earnings on Friday. That really helped out the market and the transports. Here's UPS. Got a sympathy bid there as well. But Dow Transport's finally getting a nice surge on Friday. Basically stalled out at this pivot high right here. This downsloping trend line will be good resistance. It also coincides with that 50-day moving average and this red trend line right here. So that should be good resistance there for the Dow Transports, but all things considered, a nice little pop there here in the short term. Let's take a look here at interest rates. So not a whole lot going on. They did back off. We talked about how overbought they were, and last week I showed you guys this trend line here, so this broadening pattern. Here's the trend lines there. Went straight up into that, pierced it a little bit, and then now it's backing off. So we'll see if we can get a little bit more of a pullback in yields. I'm looking for that to happen here. You see the same thing with the TYX, the 30-year Treasury, right into double top, right into that 200-month moving average, and getting a nice pullback there. So we'll see if yields can continue to pull back here. I think they got a little bit of backing and filling to do here in the cards, but overall, just a routine kind of technical pullback there for bond yields, and we'll see what we get next week. High yield debt here, HYG. It did come off the lows, so it did make a little higher lows here. Still didn't get above this pivot here from the previous week, but it's holding up for now. It's getting a little bit of a counter trend bounce. We'll continue to watch that. But again, credit spreads are a big issue right now. One of the things the market is paying attention to, but for now it's participating in the rally, so we'll give it the benefit of the doubt. Home builders here, so XHB. Coming off the lows. Now this got absolutely rocked last week, really broke through this pivot and got all the way down to that 52 handle before getting a nice little squeeze here earlier this week. I believe the previous week mortgage rates rose the most that they have since 1987. So you can see rates here all the way up at 5.75%. I said a few weeks ago that I don't see it getting through 6, or at least too much through 6, at least at the current time. But in any case, either way you slice it or dice it, a huge move here. When you consider, let's see, back at the end of the year, we were at about 3%. So we're up almost 100% here in mortgage rates. ITB also coming off the lows. This should have resistance right around the 55, 56 area. For the XHB, it's going to be about, call it 58, and then you got that gap fill right there. So under a little bit of pressure in the short term, but they can rally here. If the market continues up, we'll give them the benefit of the doubt for now. VNQ is into a little resistance here. It's a real estate ETF. If that gets through that, you got the gap fill, and then right around here, 97, 98 is going to be pretty stiff resistance on the upside. Moving on here to financial, so XLF. Again, just like the transports here, was really weak, couldn't get above this area. We'll zoom out a little bit. So that actually, hold on, let's go to the weekly. There we go. So that was that previous all-time high. We broke through that. last week, and then we really couldn't get above that this week until Friday. So it wasn't really until we got that massive short squeeze that we got a bid here in the XLF. But to its credit, it closed the week above this pivot high, so a nice outside week. You got a little resistance at gap fill. You'll have some at the 20 moving average and this gap window, but again, fins, just like everything else, getting a bid. Broker dealers got above this red bar, so they avoided a breakdown. So financials holding on here. They're probably due for a kind of trend rally, just like everything else is. Moving on to energy, so big topic of the week. So crude pulling back and really went back to this blue trend line. I said they would probably get a bounce there. You got that 100 moving average as well. If you look on the weekly, you can see it went right into that 20-week moving average also. And that did get defended here. I still am in the camp now that energy is in pullback mode. And this is what we've been talking about for a while here. At least I have myself over the last couple of months. I've been telling everybody, don't chase energy. Let's take a look at XLE here. Look at the move here from just about 2-3 weeks ago. So basically 93 all the way down to 70. The XOP here, 170 to 120. OIH, all the way up from 315 to 220. So massive haircuts here. The OIH was up 50% on the year on June 8th. And as of Thursday, it was only up 10% for the year. So we're getting these buying opportunities here. Like I've been saying for a while, don't chase energy. You'll get a chance to buy it. And we're getting into these attractive levels. I still think we got to go a little bit lower. I'd love to get crude below 90, somewhere around 85. So you take a look at this white trend line here. Kind of looking for some type of a back check to that. We never back tested that. So that's kind of what charts do. You break out and then you back test. And it should probably, I would assume, kind of coincide with this 20 period moving average. So if we can get a back check in that area, I think that's going to be a good buying opportunity for you guys. So I've also got levels worked out on all these XLE stocks, Chevron, Exxon. We just need them to get down there. Look at this trend line here on Exxon. So trying to hold on to that. I do think it breaks though. I think we do have another little leg down here in energy, and then we'll get a good chance to buy. And that's why I've been saying, guys, don't chase it up here. I can't tell you how many messages I got from people. Can we buy XLE? Can we buy that? I said, no. Wait for a correction. It'll come. And just be ready for it when it does. But in any case, nice pullback here in XLE. And that's really, you look at some of these growth stocks, even like XBI. I talked about this in my channel the other day. Look at the move off the lows on XBI, $64 to 77. That's a big move. And then you look at where it was. It basically took the elevator all the way down. So we're seeing kind of rotation out of energy and into some of these sectors that have just been clobbered. We talked about cloud earlier, XBI, some of these tech stocks. Coming off the lows finally, and that's just kind of what we're seeing right now. That's just what happens in the in the market. Bonds even getting a little bit of a bid here. Look at TLT coming off the lows. We talked about yields a minute ago. At some point, these assets just get so beaten down that some investors come in and they say, hey, look, this is kind of attractive at this level. There's nothing wrong with dollar cost averaging in here. So that's just what we're seeing right now. Seeing some rotation, but again, be patient with energy. We still got a little bit lower to go, I think, but there's going to be some really good buying opportunities here in the next couple of months, I think. As far as nat gas, also getting down just to $6, just shy of it, rather. I think it's got to test that and get through that. I would love to get it a little bit cheaper than that. I think it could possibly get down to $5, but I don't see it getting through that, honestly. And now it is short-term oversold, so it probably bounces here in the near term. But nice little correction here. So, again, don't chase these things higher. You'll get a chance to buy them, and we're seeing that right here. But a nice pullback in these energy names, and that's helping out tech a little bit. So CCJ, so some of the uranium plays, again, pulling back a little bit weaker. It did hold that trend line. So there's that trend line we talked about. So got a nice bounce off of that and a nice surge on Friday. This will have resistance around 24.25, or excuse me. Yeah, 24 and a quarter, 24.50, somewhere around there. If you guys follow the URNM, we're going to look at about $65. Should have resistance there in the short term. But again, nice bounce for the uranium plays. So we'll see what they do next week. And the potash names, pretty much got down to my level. I said about 45. I think they can get a little bit lower. So IPI, I think, can get down to 38, maybe $40. And then Mosaic here can possibly get down to, maybe 40 to 42. I like those levels in that area, maybe 43. But these things are, presenting us with an opportunity as well. So again, I tell you guys, don't chase these parabolic things. You'll get a chance to buy them, and we're seeing that happen right in front of our eyes. So congrats to everybody who was patient. You're getting a way better entry here, and I think we'll still have a little bit more downside here in the coming weeks or months, but again, much better than chasing it up here and butchering your dollar cost average. Anyways, dollar index, again, really a kind of a quiet week, is really just basically sideways. So here's your open Tuesday and pretty much sideways. You do have kind of a little mini kind of wedge pattern here, so we'll see which way that breaks. Again, I think if bonds do bid, well, the relationship has been really that yields are kind of positively correlated with the dollar, so going up with the dollar, and then the dollar should pull back when yields come back in. But the thing is, if there's fears of disinflation in like consumer discretionary names because of demand destruction, then it could be helping the dollar to bid up. And we also, we talked about the yen last week. That's also putting upward pressure on the dollar, and that is still strong. So the dollar is able to hold up right now, even with yields pulling back. So dollar remains strong. It's overbought. It's in an uptrend. But we got to respect its strength, and we'll just see. Maybe this wedge can break down and it can go into backing and filling mode. But again, the dollar remains strong, and you got to respect that. Gold here, again, kind of a sideways week. You do have potential little higher lows here. The only thing I don't like is your weekly. I don't like this red bar here. You're kind of stuck inside of. But if you close above this on a weekly basis, gold has quite a bit of upside here over the next couple of weeks. Anything below this low on a weekly basis, and gold will go into correction mode. Speaking of correction, some of the base metals and industrial metals, silver here, pulling back again this week. It did try to put in a higher low. We'll give it the benefit of the doubt there. But it's really got to get back above 22 to really kind of have any momentum for a move up to 23. Otherwise, I think it's going to head lower here in the next couple of weeks to months. Platinum, I still think needs to go lower. It's also in a weaker technical position. We can take a look here on the weekly. You got a weekly close below that trend line now. So we'll see if it can reverse it next week, but a potential breakdown there on platinum, and I think that will go lower, which will be a buying opportunity. And palladium also on the weaker side here as well. The big story of the week, take a look at copper. What a fall here on copper. This was a big surge here a month ago, or really 3 weeks ago, up 5.5% in one day. And then since then, it's just been a straight fade. Got all the way down to 365. I said it was going to go to 385, 390. We got through that pretty quickly, pretty easily. And I do have another level that's a little bit lower, but it is so oversold in the near term that I think it probably at least wants to backtest $4, maybe 405. You did put a nice tail candle in there to close out the week on Friday. So it did try to reverse a little bit. We'll see if we can get some follow through to the upside next week. But again, some of these base metals and industrial metals are under a lot of pressure here in the short term. All right, so let's take a look at some of the cryptos here. So Bitcoin also remains weak. So like the transports and the semis on the weaker side, it did put in that little pivot last week, and then kind of put in a little micro bull flag and a pop here, and now kind of just drifting higher. It's not, really showing any conviction here. You see Ether there, a little bit better. Some of these are better than the others. Doge is above the 20-period moving average. Polkadot's on the weaker side. Litecoin had a nice pop. XRP got a nice little bid the other day. But in general, crypto a little bit on the weaker side. And, it's like every single day we hear news about some fund or some, crypto-related desk getting blown up or having liquidity problems, and that's really causing investors to say, I don't want anything to do with this right now. I'm going to pull my money out of it and put in something else. So it's really hard right now for crypto to rally, really hard for Bitcoin to rally. It did put in a low there. They stopped a lot of people out at that 20,000 handle, and it's trying to hold up for now. It's tough. If the market can get a bid and put in some type of a summer low, like a summer rally like we were talking about, I think crypto will probably hold up, but right now it's looking like it wants to underperform. So we'll see what we get here over the next couple of weeks. It's getting a kind of a technical bounce right now. But if you get through this pivot, I don't think 16,000 is enough to really hold it and stop it from going to 12. Since you already kind of came down here, and you basically kissed that level, and now you got to bounce. So if you put in a lower high, it can go down to 12,500, somewhere in that area. So just be aware of that on Bitcoin. It is weak. It's not bouncing like some other sectors are, and just take note of that. Anyways, here, so flipping back over to the spiders. Again, a nice week here. We filled that gap. Maybe we get a little bit of a pullback Monday or Tuesday, but I do expect us to advance. I do expect us to get at least a back test that 400 handle. And then, you know, if we get through that 408, it's going to be pretty good resistance. I don't know if this will be a short, you know, an area where we really want to short. Because if we do get a summer doldrum type market for the next 2 months, you know, some of these levels, you could get a pullback and put in a higher low, and then maybe you could make another leg up before the next leg down. So we'll have to take it one day at a time, one step at a time. But as long as the volume remains light, we expect volatility to continue to pull back. And if that happens, the market will be able to rally. Anyways, guys, take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. And I will talk to you all next week.